Hello everyone, you are welcome to this live stream. In this live stream, I'm going to share with you how I use three technical indicators to determine my entry point and exit point on trading on Binance. This is mainly, you can use this also in spot trading and also on futures trading. But today, I am going to be trading on spot market. So when you log into your Binance app, you are likely to, come to this particular page. So once you are here, you just go over to trades. Being on trades, let's head over to the charts and see what's going on. So mainly looking at this from here, it is on 4 hours time frame. Not coin USDT is the coin pair. So mainly looking at this, you can see it is already consolidating. It's been moving on a seemingly straight line for quite some time now. Let's see how many days it's been like this. Probably like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost in 2 weeks time, it's been ranging on this just close to 2 weeks. Little few days less than 2 weeks. So and the previous day was a red candle, and today also, it's a red candle. Yesterday had a very long week, showing a rejection from the top. So I will now add my indicators. Meanwhile, for day trading, I normally use my 4 hours and 1 hour time frame as my top-down analysis. So starting from 4 hours, we can see it is consolidating. On the 1 hour time frame also, it is consolidating and relatively now on the lower side. So for me, I cannot say if it is lower or higher at this point. I like to use my indicators to be able to make more informed decision. The three indicators I'm going to be using today is the MACD, that is moving average convergence divergence, popularly known as MACD or MACD. The second indicator is the relative strength index, that is RSI. The next one is the Bollinger bands. So in adding the indicators, I am going to start from the third one, which is the Bollinger bands. If you are using Android phone or mobile version of this Binance application, the Bollinger bands is written as BOLL. That is the short form. So you just tap on it, and here you have the Bollinger bands. The Bollinger band is made up of three different lines. We have the upper band, the median, that is at the line at the middle, and the lower band. All these measures the moving averages of the price at different levels. Okay, so looking at this now, according to my Bollinger bands, the price is trading at the lower, very closer to the lower band. Okay, which is somehow suggesting a bearish move of the price. That is, the price seems to be getting down. Okay, let me tell you how the Bollinger band behaves and how it helps me to make informed decision. If I want to buy, like now I want to buy this coin, I want to buy not coin USDT. I cannot buy when the price is trading at the upper band of the Bollinger band. I only buy it when the price is below or at the lower band of the Bollinger Band. Okay, once the price is above the median line, I don't enter the trade. That is a buy trade. I am explaining the buy trade now. I'm not talking about sell. Okay, so now according to Bollinger Bands, whenever the price, the candlesticks are closer to the lower band, it suggests that the price is at its lowest point within that time frame. Okay, now with this Bollinger Band, let's just look at it at the 4-hour time frame. You see, considering the 4-hour time frame, the price is trading exactly at the middle. Mind you, as a day trader, I don't use 4 hours time frame to enter my trade. Rather, I use it to have a wider view of the market structure, how the market is, how the price is behaving. Okay, from this point now, there is possibility that this price will fall lower within the couple of hours. Okay, like in the next 12 hours, there is possibility that the price of this coin will fall lower. Okay, now using the 4 hours and looking at the history, I might say that I can only safely enter this trade. Mind you, buy trade. I can only buy this coin when the price under this time frame touches the lower band of the Bollinger Bands. Why am I saying like this? Look at the immediate previous low, swing low. The nearest swing low shows that under the 4 hours time frame, the price touched the Bollinger Band and without much time went up. Let's check the history and see what happened. You can see that once this trades below or touches the Bollinger Band, the price tends to go up. Though it ranged for quite a while here at this point before moving up to a higher level. So again, we can see here again, here traded for a long time on the lower bands. Okay, see here touching and going up, touching and going up. Here also touching and going up. So this is what I am going to use to form my strategy. That is for me to enter at the very possible best price range. I think I need to respect this principle. Okay, though Bollinger Band is not a standalone indicator. Okay, it can fail whenever there is an external force that acts on the market. Example, there is any fundamental news about this particular coin or the crypto market generally, it can affect the performance of the Bollinger Bands. Okay, fine. Now I have established my one of my entry criteria. On the 4-hour time frame, the price needs to touch the lower band of the Bollinger Bands. This is point number 1. Okay, now for me to have a more further confirmation, I need to employ the second indicator, which is the relative strength index. Relative strength index, RSI, shows the strength of a particular trend. Okay, and it ranges from 1 to 100, from 0 to 100. Okay, there are preconditions. There are some popular popular hit points on the RSI. We have conditions like overbought condition, we have oversold condition. Oversold condition is when the strength of the selling pressure on the market or on the price of the coin has gone so much low. And can identify this whenever the RSI value is from 30 below. Whenever it is at 30, at level 30 and downwards, we say that the market has been oversold. In the reverse direction, whenever a market overbought condition occurs, whenever the RSI value is at 70, anything that happens from 70 and above, we say that the market is overbought. Okay, how does this affect our decision to buy or sell? Now we are buying, okay? We are buying only to make profit, right? That means we're going to sell at some point. So if you happen to buy when the market is oversold, that means whenever it is overbought, you have to do what? Sell and make your profit, right? Okay. Now, let me put the indicator. Where is RSI? Just come to this indicator tab and see RSI. Simply stands for Relative Strength Index. From the Relative Strength Index here, you can see that the RSI value here is 45. Okay, 45.7, and it keeps changing as the market price is also changing. Okay, now the market is right at the middle, just relatively at the middle. Now it signifies the market is ranging or moving sideways, and it is a period of indecision. According to these indicators, the market is at the period of indecision. Okay, we either wait for it to for the price to come down lower more, or we gonna find another indices that will tell us whether the market will continue moving up from here or it will continue going down. Now, in as much as these two indicators, the Bollinger Band and the RSI, is not giving us a clearer, a much more clear information what to do, I am going to employ the third indicator, which is the moving average convergence divergence. Okay, the moving average convergence divergence has signal line, the MACD line, and the histogram. Okay, let me put the indicator so you can see what I'm talking about. Here it is. You can see the purple line is the MACD line, the yellow line there is the signal line. Okay, I'm going to be using this to explain to you how I make use of this indicator to take my decision on the market. Whenever let me start from the MACD line and the signal line. Whenever the signal line is crossing the MACD line, it means that it signifies trend is about to reverse. It shows trend reversal, and vice versa. That means if the MACD line is crossing the signal line upwards, that means the market is going into the uptrend. And whenever the reverse happens, it means the market is going in the downtrend, like you can see here right now. Now, and again, coming to the histogram is also divided into two main parts. Okay, just like the equator. Okay, there is the zero line. Okay, now whenever the histogram is being formed above the zero line, it means that the market is seemingly in an uptrend. Again, when the histogram is forming below the zero line, it means the market is in the downtrend. That means the price of the coin is reducing. Okay. Now, another indicator here is that the histogram, if you watch here, where we have the two big green and red candles, the histogram is in green color. Green color simply represents that the price is on the upside, okay? And when the histogram color is red, it means the price is in the downtrend side. That is, the price is reducing. So we can actually have a red candle on the upside, which is showing weak downtrend. It is on the downtrend, but the pressure is very, very weak. You can see here, this is where we have a very clear distinction from the between the downtrend and the uptrend. You can see the green line, the green bars, and the red bars. Notice that whenever the green bars is changing into the red bar, at that point where the green bar stopped and the red bar started, the signal line also crossed the MACD line. And if you look at the candlestick, the candle there also was red. Just take a look at here. You see what I'm saying? There you had this massive candle, red candle. The signal line crossed the MACD line, and the green bars stopped forming and the red bars started forming, which means the market kind of reversed from that point. And again, the thicker the green color, the stronger the trend. The thicker the red color, the stronger the down trend, the bearish trend. Okay. Now, if I want to trend in a reversal, I should look at three main criteria that should be met before I can decide to enter a trade at the best possible price level. Number one indicator is the Bollinger Band. The price, if I want to, now I want to buy this coin, right? Number one thing I would look at for in the Bollinger Band is that the price, that is the candlestick, must be touching the lower or very much closer to the lower band of the Bollinger Band, and it must have a green bar, a green candle, okay? Green candle, and the candle must be closer to the, or a bit going out from the lower band of the Bollinger Band. That is condition one. At this point, you can see, let's check if this condition is met. Okay, see, this is met, okay? The candle is at the lower, is closer to the lower of the lower band, and the signal line must be crossing upwards towards the, must be crossing the MACD line, heading towards the upside. At this point, this condition was not met. So you see why I tell you that Bollinger Band alone may not be able to give you exact signal. Now look at it here. I don't know if I can expand this more. Okay, I think it's okay now. The signal line is not yet crossing. Let us look at the next candle. At the next candle, the signal line is crossing and the histogram is showing a green bar. So if I am to enter, I will pay more attention whenever this candle is formed and wait for confirmation candle to form again. If the next candle opens above the previous green candle, it is a good confirmation. And at this point, the histogram bar must be green and the signal line must be crossing or has crossed the MACD line. If these three conditions are met, that means it's a good indication that the market, you can actually buy the market at this point, and it is relatively in a good level. Again, another indicator you need to consider here is that I usually consider is the relative strength index. If the relative strength index is below mark 70, that means it has more potential to go more up. That means the market is not yet overbought. Okay, so if you look at what happened here at this time, see the position of the relative strength index. It was quite high, but the Bollinger Band was telling us correct information, was suggesting us a good time to buy, and also the histogram was telling us a good time to buy. In my own opinion, I would neglect the RSI and continue with the trade if I am confident enough. Mind you, I can do this neglect only in spot trading. In futures trading, I cannot try it. All conditions must be met. Number one condition, pay attention to this area, because this is kind of summary of the whole thing I've been talking about here. The three conditions that must be met, or four conditions that must be met before I can take a trade using these indicators is: number one, the candlestick or the price of the coin must be trading at the lower or near to the lower band of the Bollinger Band, and the candle must be green. Number two, the RSI should be at 30 or below 30 before I can consider it a good indication to buy. Number three is the signal line must have crossed the MACD line, and also the histogram must be showing me a green bar. That is, a second green bar must have been formed, and also in the candlestick the second green candle must have been formed. These three conditions, once they are met, then it gives me a good signal to start buying my trade. So this is the summary of how I normally use these three indicators to take informed decision on entering my buy trade on the spot market. You can actually also employ this. I do also use this on futures trading, but I don't do more of futures because it requires more meticulous and precise and more accurate analysis. There are a lot of things supposed to come into play, otherwise you gamble with your money. Okay, and me, I am not a fan of wasting of capital. For me, my psychology of trading, what I have learned over 7 years in the crypto space and online trading is, you see, protection of your capital is as important as the profit you are chasing. We all came here, including the owners of all these coins that you are trading, the owners of this project, the founders, all of them came here for money. Okay, so don't ever think that someone came here to maybe dash you money or have sympathy on you. No. Don't remove that from your mind. So whatever thing you need to do to protect your capital, to minimize your losses, to minimize your risk, please do apply it. So in this sense, whenever I am trading on the futures market, you see these three conditions, they must be met. But in the spot market, why it is a bit more, the risk in the spot market is lesser, is because of the fact of the DCA. When the coin, like I always make sure that I keep some amount of USDT in my account in case the market goes against me, and it is a coin that I believe so much in, I can actually take a stop loss, that is get out of the market, or alternatively I consider using DCA strategy. DCA simply means dollar cost average. Some school of thought would say it is distributed cost average. Distributed cost average means that as the coin is going down, you keep on buying the assets, okay, at predetermined intervals. At the end of the day, when the price of the coin starts rebounding, you will be, your overall cost on the whole process of buying will be reduced. It will be spread across the number of times that you have made the purchase of the coin. So that is my strategy, the strategy I use to approach the spot market using these three indicators. Okay, so that is it for this particular using three indicators to place trades on spot market. I'm actually using Binance application. The application or the exchange doesn't really matter because it's still the same thing across OKX, across Bybit or BitGet or Get.io. Technical indicator is the same. If you want to get the best out of technical indicators, you can consider TradingView. There is actually a free plan and also a paid plan. The paid plan provides you with more features for technical analysis and also more customizable indicators. So that is all for today, ladies and gentlemen. Thank you for staying through to this time. If you have any question, don't forget to put it in the comment section and I will do my best to reply to you. I like to read your comments. I like to open up discussions on this topic. If you found value in this video, kindly subscribe to our channel, put on the notification bell so you can get informed whenever we post any video or whenever we are going to go live like this. Okay, then share this video with your friends who may be interested in what we discuss here. Please and please protect your capital. Don't just trade blindly. Don't just trade because don't FOMO. Okay, avoid the fear of missing out. Take time to do your analysis. With these indicators, analysis are made very easy. Okay, once you just look at these three parameters, if they are not falling in place, you just simply move over to the next coin and check the one that has more potential to give you more profit. Remember, we are here for the profit. We are not here to sing someone and just look at chart and go away. We are actually here to make more profit, to maximize our profit. So this is not a financial advice though. You own your money, you decide what to do with your money. I am only sharing what I do with you here, how I place my trade, because sometimes some members of my community do ask me, okay, how can I do this? How can you know when to? How can you know when not to? So that is the inspiration behind this video. So thank you once again for watching. Stay in touch. See you on the next one.